And that's probably going to be the biggest challenge, as you want to grow the real estate business, that's going to be what you focus on.
Welcome to Building Wealth Through Real Estate. If you invest or desire to invest in real estate, then this show is exactly what you need. And here's why. We all know that the number one thing that you should be doing as an investor is networking. Your network equals your net worth. But how can you use this to your advantage? Well, firstly, take notes. Listen to what the guests have to say. If you're a new investor, you can learn from the mistakes that they've made, the experiences that they've gone through, and learn how they think. If you're an experienced investor, you could see strategies that they may be implementing that you haven't thought of using yourself. Now, secondly, you may have questions, and if you do, great. Put them in the comment section down below, and this way we can be sure to get those questions answered for you. And thirdly, there's a ton of information out there, but I found that most of it is relevant to the US, and it's hard to try and take out and extract and see what's relevant to your area. So all of the guests that I'll be interviewing are Canadian investors. So if you invest in Canada, if you're interested in investing in Canada, then this show is exactly what you need. Joining us today is Mr. Cody Kelly. Cody, could you tell our listeners a little bit about yourself and where your real estate business is currently at?
For sure. So I've been really diving into real estate since January. I've been involved in it for about almost 2 years now. And my real estate journey is in growth state right now. So I'm looking to continually expand both aspects of the real estate that I'm focusing on at the moment, which being fix and flip and long-term buy and hold.
When did you first develop the this interest within the real estate community?
So it started a couple years ago. A friend of mine and I had some money and we were looking to do something with it. So we thought, you know what, let's buy a rental property. I've been told, for many years that real estate's a good place to put your money. So we started looking into it and we ended up buying an apartment style condo. And so that was the start of my journey. And after that, it's a pretty interesting story, which got me to the next level, actually. I was getting my hair cut about a year ago in January, and my hairdresser was telling me about the person that owns the hotel that she works at does fix and flips. And the one that he just finished, he actually made $100,000 on it. And I thought, I can do that. That's right up my alley. That's no problem. So that started me looking into it and trying to figure out what I need to know and how I need to go about doing it. And my business partner found a meetup, a real estate meetup in St. Albert. And he sent this to me and he says, "Here, you should maybe we should go to this." So I signed up for it. It was on Eventbrite, and the day of, he was out of town, so I ended up going myself, and I typed the address in my GPS, and it was a house. And I thought, that's weird. So I sent it to him. I'm like, "Do you know this is at a house?" And he goes, "Yeah, I guess so." So, okay, drive down to this house, and I send it to my wife. I'm like, "Here's where I'm at, just in case, I don't know what I'm walking into here." Um, yeah, and I walked into this world that totally changed the course of my real estate journey. Wayne Hillier was the person who was having the meetup, and I met him and started having a conversation, started talking to all these great people that were there, and that was the first of many meetups that I went to now and expanded my knowledge.
Yeah, I
So
thought the
very
exact
interesting.
same thing when I went to the first meetup too, because prior to that, like the few meetups that I did go to, it was sort of at a specific venue, and this was the first time that I was actually going to a house, which I find really neat though, is being able to actually see one of the projects like in one of the phases kind of thing. But yeah, I can completely relate to that.
Yeah.
So you touched on the strategies that you're pursuing. Currently, it's fix and flips as well as long-term buy and holds. Are you going about these, using like the traditional method, or are you going about it using more creative strategies?
So right now, the traditional method.
Okay.
And one thing that started on this process was, and as I walked into that first meetup, I asked Wayne, I said, so what is the renovation cost on this property that you have here? And he told me 120,000. And I thought, oh, okay. And then the home was like a $400,000 home, so you need 20% down, initially thinking that to get a mortgage. And okay, so $220,000 I need to get this property and to do this flip. I'm thinking, I don't, how will I ever do that? Um, and in the end, once you get into it and start understanding it, it's actually very easy. And money is the thing that holds people back, but money is definitely not what you should be worrying about. You just need to understand how to find joint ventures. There is a lot of people out there with money looking to do something with that want to invest, and you just got to bring in the right opportunity.
Yes, yes, I completely agree. And I definitely want to touch more on that further in.
Mhm.
Um, but tell me, like, while speaking about like getting deals and stuff, are you narrowing down, like choosing which areas would work best for the strategies that you're pursuing? And if so, like what factors do you consider when narrowing down which neighborhoods to keep an eye on?
100%. And especially with fix and flips, it does not work in every neighborhood. It does not work in every city. It's very specific where you need to go, and some key things that you need to find. So when I start looking for it, I started looking for the spread. So from the purchase price to the after repaired value, I shot for a minimum 200,000. And the reason I picked that number is because I am assuming that there'll be 80 to $100,000 in reno for these places to be able to get that spread. So there is only a narrow window across the city, of communities where that spread will work. And it needs to be communities that are very desirable. So you want something that when you build the nicest place on the block or the nicest place in the community, it's going to sell quickly. And for it to sell quickly, you have to have desirable neighborhoods.
Just to dive a little deeper into that, though, like what sort of things are you looking for, like when a potential deal crosses your path?
Okay, so when a deal crosses my path, I start with the ARV, and the biggest thing is to have the proper power team. So I have a really good realtor that's supporting me, and he sends me the deals. He sends me the comps on the deals, so that's other sold comparables in the neighborhood, and I look through those comps and understand, okay, what renovations did they do to get that sale price, and from that I can work backwards to try and understand if the deal is going to work. So the places that I'm looking for are apartments or bungalow style homes in desirable neighborhoods around 1,000 square feet or 1,100 square feet. And to do the estimate on that is very easy. So start with $65,000 to do all paint, kitchen appliances, and flooring and trim, doors, internal doors. And then from that, you add on roofs, furnaces, windows, and hot water tank or anything exterior, like any other things that might come up above and beyond that. But from you taking that number, you can pretty much calculate what the renovation or what an estimate renovation is going to be within 15 or 20 minutes. And right away, you'll know if the deal is going to work or not.
That is a great strategy. I know a lot of people have their own way of running the numbers, but I feel with that you can get through a whole lot more volume. Because that was going to be my next question is when it comes to like analyzing deals, like how much time are you putting into each one? So you say about 15-20 minutes.
Yeah, and that's to get started for sure. And that will decide if I actually should go down and look at the property or not
Of
and
course.
dive in deeper. Once I go look at the property, I can analyze it a little further and understand if there's going to be some unexpected things that might come up, such as foundation cracks or things like that that we might see from the walkthrough. From that, I'll make a decision on if we should put an offer in or not.
Okay. And when you go and view these properties, are you going at it alone? Do you take anyone with you?
Yeah, I've just been going by myself with the realtor.
Okay. Okay. Yeah, it's sort of like a funnel. It's just that first phase of just qualifying whether a property is even worth taking the time out to go and view it, and then viewing the property, and then just accounting for any other costs, and then seeing if you can make the deal work from there. You are currently partnered up on this fix and flip deal that you have now, right? How were you able to find a partner on this one? Just for people out there, like you touched on, getting a joint venture partner, looking to do exactly the same. How were you able to find a partner, and what advice do you have for people out there?
Talk to everyone. That's the first step is start talking to everyone. Start talking to the people that you're paired off with on the golf course. Start talking to your friends and family. Start talking to people on Facebook, and that is the biggest thing. So I went on different real estate groups on Facebook. I joined them, and I followed and I read what people were commenting. And if I seen someone that I thought, oh, that might be interesting to talk to, I added that person or I sent them a message and tried to book a meeting to have a short call with them and dive deeper into kind of what they're looking for. And once I had a few of those, I was able to lock down some funds. And you'll find that when you go into those calls with confidence, and the first few of them was obviously more difficult, and the first few of them I did with friends and family, and sometimes that makes it more difficult as well. And once you start going into them with confidence and start to understand that you know what you need to do and you know how to find the answer if you don't know, that's the key. So once you show them that you have the confidence, then they're going to be willing to trust you and they're going to want to work with you. Once you have that, the harder part is finding the deal and finding a deal that will work within their parameters that they're looking for.
Just to touch on that, though, was there any preparation that you did prior to speaking to these potential partners, perhaps coming up with how to handle potential objections that they may have or questions that they may have, just so that you feel more confident going into it?
Yes, there was. Yes. The first thing I did was just research, research, research. I read books. I started listening to podcasts and learning as much as I can about what I needed to know ahead of time and what the risks were. If you can explain the risks and how to mitigate them, you got a better chance of closing these deals. The other thing you can do is you can understand who you're going to talk to, what their motives are. If you can figure that out ahead of time before you try to close the deal, you'll have a better chance of closing the deal. And the last thing I did was listen to Grant Cardone's Closer's Guide. And I played that for a few hours and listened to a bunch of different closes that he had and changed my mindset a bit to better prepare myself to finish those meetings and lock down the deals.
I haven't checked that one out yet. I'm actually going to add that on my list, though. Closer's Guide. Okay.
It's very good if you're going to buy vehicles, because it tells you exactly what you need to know for how the car salesman's going to talk to you and how you how you can overcome that and get the best deal.
Yeah, and I feel like that that could probably be applied to a lot of different situations, whether it's finding joint venture partners, whether it's closing on a deal that you found off market, a lot of possible situations. So yeah, I'm definitely gonna check that one out
For
though.
sure.
So what advice do you have for someone once they've done some preparation, they've had the call, they've sort of figured out what the next person's motivations are, what their desires are, they've done the pitch, and the person may seem interested. What things should they consider when deciding if it's an actual good fit, though?
So the biggest challenge is to knowing, when we talk about the motivations prior as well, like knowing what the motivations are and if that's going to fit. Because for example, for this joint venture that I signed with, they wanted to understand how to do this deal. So they wanted to be involved fully, which usually the money partner brings the money, gets some regular updates, but isn't really involved in any of the decisions. Where this one, I set it up a little bit differently because he wanted to learn from the experience. So we actually have it set up as regular calls to go through all the steps of how we're finding contractors, how we're deciding on if this wall should come down, how we're deciding on the level of renovations that we're going to do, and different things like that. So that way he can now take that knowledge and hopefully do another flip on his own after we're done this first one.
And what would be some key aspects? So you find the joint venture partner, because I take it you look for the partner first, and then you found the deal.
Yes, I tried doing it the other way,
Yeah.
and it didn't work out for me. So I found a deal, tried to go get the money, and at the time as well, I didn't really. I think now I would be able to do that, but at the time I didn't know as much as I knew now, so it was a little more difficult to do. So the biggest challenge I find is trying to have people that are not in the industry understand that you can take a 1950s home, put $100,000 into it, and make 200,000. It's very difficult for people to see that, especially in these neighborhoods as well that we're looking in. There's going to be many homes that are have sold in those neighborhoods that did not do the renovations that are at a lot lower value. So when you look at comps, you got to make sure to pick out the comparables that show the value that you want and be able to show that to the money partner that you're bringing in. And I've ran into many people who looked at the deal and said, no, it's not, I can't do that. The deal doesn't make sense. But yet, when I show it to professionals that are doing this on a regular basis, they tell me the deal makes sense.
So you find in that their confidence in the after repair value is just not there. They don't believe that it would sell for that price.
Yes, exactly. They don't believe that, that home can, with just these little renovations, will adjust to that price.
And then tell me what are some key aspects that you look for within a flip property just to ensure that it's a good fit. So I know you said you sort of funnel it down to see if there's a big enough spread. You go and view the property, see if there's any other things to consider with regards to the costs, such as cracks in the foundation, that sort of thing. Is there anything else that you'd consider outside of just the general repairs when analyzing a flip property or viewing a flip property?
There's some of it does come down to gut feeling. Um, when you look at the outside of the property and you look at what could be done to it, is it going to be appealing afterwards, and can you make it appealing afterwards? So we've seen quite a few properties, and we walked away from quite a few before we decided on this property. Um, yeah, beside the main things obviously are the ARV and make sure that the money's there. But lastly, we kind of do a gut check and say, do we believe this is the right fit?
Tell me, have there been any times where you have these ARVs, and then when you compare it to the potential deal that you're looking at, you just feel like even if you were to put those, like the same standard of renovations into it, that it just wouldn't look as desirable, so you'd rather just skip that deal, kind of thing? Has that happened?
Not yet.
Not yet. Okay.
But I will say that, I have walked into some places, and if it wasn't for the meetups that we went through and seeing the different stages of other people's flips, I think it would be a lot more difficult for me to see it. Because when you walk into these places, they got carpet from the 1950s. They got pink or
Yeah.
or blue or black walls. Like there was one that I'm sure had a sex room in the basement. All the walls were black. There was a light coming out of the wall halfway up the wall, and so, like there was some weird things that I've seen out there looking for properties, and that's what you're gonna see, right? Because you want good deals. So to find good deals, you're gonna have hoarders, or you're gonna have other places like that where people just didn't take care of the property. That's what you're going to be finding. And you got to be able to see past that in your mind and just say, yeah, no, all this stuff's going to come out here. You know, the walls are yellow. That's not a big deal. The yellow walls from smokers, that can be cleaned up. The smell from the cat urine, that can be cleaned up. You get an ozone machine in there and leave it running, and the smell's gone, right?
Exactly.
Carpet's gone
Yep.
and the smell's gone. So knowing that and being able to get past that as you're doing a walkthrough is very important.
Okay. Have you found any objections with regards to finding joint partners that just don't see this? Because obviously, seasoned investors and or even investors that or new investors that are somewhat knowledgeable um, can see past this. They know that this is the beginning phase, and that looks and smells like money. That's where the opportunities lie, is within those deals. But convincing a joint venture partner who isn't really that into real estate investing, but they know that real estate is a sound investment and they just want to give you their money. Have you encountered any of those where they just can't see the vision on how you're going to turn that around?
For sure, for sure. And even the first property that I had, that I went to find joint venture partners on, when you looked at all the properties in the neighborhood that were for sale at the moment, it would have been the highest in the neighborhood. And the highest one that was for sale in the neighborhood didn't have a double car garage. So when you take that double car garage into account, you're going to know that you're going to raise this value of this home by a certain value. And they couldn't see past that. All he seen was, you're going to try and sell the most expensive property in the neighborhood. Well, that was at the moment from the properties that were on the market. But when you looked at comparables, yes, it did make sense that that was the value that it should be.
Yeah, exactly. And not only will it increase your odds of getting a higher price in comparison to your comparables, but it will increase your desirability as well, right? So, meaning that it doesn't stay on the market as long, right?
Yes, for sure. You listen to the news right now, when you hear doom and gloom, you hear houses aren't selling, interest rates are going up. But I can tell you, I've watched other flip properties here in the last month or so sell within a week or 2 weeks. Like there's properties that are still moving very quickly in lots of different types of homes as well.
Exactly. Because if that wasn't the case, then investors wouldn't be flipping properties because they need people to buy the properties once they're done and they're still doing this. So, yeah, people are definitely still buying properties.
Exactly. It definitely is. You got to be a lot smarter in this market and you got to make sure you're buying the right property, but it is still possible.
Now, I know this deal is still fairly new, but are there any things that you've taken away from this flip so far that you'd keep in mind going forward with your future deals?
Um, No, I don't have anything yet. Yeah, it's definitely a learning curve. And as we go through the process and just understanding many things are different than buying a regular house, and many things are different than buying a buy and hold. So, um, yeah, I would say there's definitely going to be a lot of learning that's going to happen, but I'm very well prepared.
Okay. And I know you said on this one, you found the joint venture partner and then you found the deal. Going forward, are you going to keep it that way, or like once you're looking for the next partner, are you going to wait until you have a deal and then approach them, or just find the partner then find the deal?
I'd rather find the partner first, unless some deal comes up that I think I can quickly find a partner on, then I will. But this strategy seems to work better for me at the moment. Um, yeah, it is hard, like you want to get a letter of intent from the joint venture to try and make sure that they are ready because when you do find the deal, what if the deal doesn't quite fit the criteria you talked about? Something needs to be adjusted, they might walk away. So I would also have a couple people ready. I do have a list that I keep of potential money partners. So if something does happen like that, I got a couple other people I can call and say, "Hey, are you interested? Here's this deal I found."
Well, the upside to that means that once you find a deal, you can close on it much quicker,
Yes.
right? You're not going out there looking for a partner. I guess the only potential downside is presenting this to a partner. You don't have the deal yet, but you're presenting a a potential deal or a future deal that will cross your plate. How are you giving them numbers on that? Because obviously you have to give them some sort of averages. You're not able to give them exact numbers like this is, what it's going to cost to repair it. This will be the after repair value. That's what we get in it at. How are you presenting that to them? Because obviously they want to know their expected return on the investment.
Yeah. So the exact same way that I mentioned earlier about how I look for properties, that's how I present it. So looking for places with that 200K spread, and the AR or the profit margin that I like to see from it is 30 to 60K. I don't really want to go less than 30. I know there's some people that go for 20 or 25, but when you do that, you don't leave a lot of room for mistakes. And there's always going to be things that come up that you're not expecting. So you want to make sure you leave some room in there.
Absolutely. So, that being said, are you accounting for contingencies on delays in getting the property rehabbed and maybe costs being more than what you expected them to be, that sort of thing?
Yes, I am. Yeah. Um, and we can talk a little bit about the deal that I have here. It's the ARV. I got it for 340, and I had to put in a backup offer, and I had to put in an offer above asking to get it. So one of the key things that we did is we were able to get short financing. So the financing condition was only 3 days, and we were able to do that from help with Calvert as well. They're very quickly at moving on financing, so we got pre-approval first, and then we went through and found the deal. But because of that, we were able to lock down the backup offer, and the first offer fell through, so we were able to get the property. So from that, the ARV is 540. And the way I did the calculations on it is I actually did the ARV at 500 and I did a max of 7 months with a hope for 5 months. So I did the calculations at kind of worst case scenario or the way I look at worst case scenario and made sure that there was still profit margin there.
Okay. How did you go about estimating the repair cost before putting in your offer? Was it just from averages that you've gotten from other investors, or like some research that you've done yourself?
Yeah, a lot of it was averages that I got from another investor.
Okay.
So I took a full course on how to do fix and flips, and with that came a bunch of averages that I used. Um, I do as well. I know there are some things that we can save money on if we need to, and I do already have some connections for some plumbers and electricians and different things like that that are fairly reasonable. So I'm thinking that the estimate that I got for renovations is probably higher than what it will be, but we'll see when we're done.
Okay, so I take it then you're not getting a general contractor. You'll oversee all of this yourself.
Yes, exactly. So I'm going to hire the trade separately. So the goal of this, obviously, is to be able to do this hands off. So to be able to do this by hiring a general contractor that handles all the trades and by ordering the supplies very similar to other flips that I've done, so you know exactly what you need to order, and we can do this with a very little amount of effort involved on my part. So that's where we're trying to get this business.
Yeah. Try and get somewhat of a template. You're buying the same materials, you're doing
Yeah,
more or less the same renovations, and then you can be pretty dialed in on what it's going to cost, the timeline, the whole process, and you can sort of just oversee it yourself.
yeah, for sure.
How quickly are you intending on scaling this up though?
um, well, we'll see how this first one goes. Um, the goal would be probably to do 3 or 4 next year, and then scale it more as we continue. But as the market changes, we need to also make sure that we're ready for whatever may come and make sure to take advantage of whatever opportunity or whatever focus that we need to move to, and that might change.
Of course, of course. How active are you when it comes to doing renovations and repairs? Now, I know you said you'll oversee hiring the trades, but are you going to be getting in there and doing any of the repairs yourself, or are you going to outsource everything?
We're gonna do some stuff ourselves, like maybe some of the demo, some of the yard stuff outside that we need to do. Like there's some of the basic stuff that doesn't need permits.
Yes.
Is there anything that needs permits for sure will be done by a contractor.
Yeah. The demo stage is always fun, right?
Yeah, for sure. Exactly.
Yeah. Okay, so I know you already touched on the numbers, but since this is one of the biggest problems that new investors face is just analyzing deals, understanding how an investor thinks. Would you mind if we run through more of the specifics regarding the flip?
Sure.
Okay, so what kind of property is it and where is it located? Now, I know when we started, you said you essentially looking for about 1,100 square feet bungalows.
Yep. So it's an 1,100 square foot bungalow. It's in Terrace Heights. So, a lot of the neighborhoods right close to the river, especially on the south side of the river, are very desirable. This neighborhood is close proximity to downtown Edmonton. So, for people that are in the office towers and stuff like that, it will be very good for them. Um, the general age range in this community is in their 40s as well. So, and it's not, it's people, families without children.
Okay, okay. And what's the age of the home?
It's built in 1958.
And I want to ask how you found it, but I'm guessing you found it through a realtor, right?
I did, yes. I had my realtor bring it to me. And another reason it's very important to have a power team is I got this deal before it was on the MLS.
Oh,
So, and I
great.
also tell you, it was already sold before it was on the MLS because by the time I got the deal, the next morning the offer was already on it.
'Cause that was my follow up. Is like I know you said that you were the backup offer, so this deal didn't even get on to the MLS, and it already had two offers in essentially.
Yes, and there was other offers as well. So
And tell me when did this get all um locked up though? Was this like when the market was like still really hot, or was this like recently?
no, this is recently. It was beginning of October into September.
that just shows you that things are still happening. Things are still happening. Properties are getting closed, and some properties are getting multiple offers still. So
Yeah, for sure.
yeah, yeah. So I know you touched on the numbers. The purchase price, and you got the financing through Calvert. Could you dive in a little deeper on like what the estimated repair cost is?
Yeah, so the estimated repair cost I got is 75,000. And I did increase that and I put $80,000 in the budget. Like I said, I tried to shoot for worst case scenario. Calvert actually adds 30% to your budget when you put it in. So when they run the numbers, they add 30% to whatever you have to make sure that the deal still works.
So if you over conservative with your numbers, will that like negatively impact you on getting financing through them? If you add like 20% yourself kind of thing, would they add a 30% on top of what you've added?
Yes, they will.
Okay,
Yes,
okay,
they will. So it's very important, try to be exact.
yeah,
That that 30% buffer is going to be in there in that number, and they will analyze the deal themselves as well. They'll look at the comps and they'll give you an after repaired value. Now, I can tell you that their after repaired value is lower than the numbers that I ran and lower than the numbers that we're probably going to expect. But from talking to other investors that got mortgages through them, that is normal for them. They're usually very conservative on their numbers.
yeah. That makes sense. They want to just make sure that they have a buffer there to protect themselves. And with regards to the rehab side of it, do they go and verify that your numbers are accurate on that, or do they just add a buffer on there?
No, they just add a buffer.
Okay, that's good to know. And you said you got like financing with them before you found the deal. So was it sort of like financing for like the specific amount subject to us approving the deal itself, making sure that the numbers work?
Yeah, exactly. So they approve you for a dollar value. You tell them up front kind of a range of a dollar value you're looking for, and they run pre-approvals just like a normal bank would.
Perfect. Perfect.
I don't know if you want to talk about the interest rates,
Absolutely.
but that's something, yeah, that's something that lots of people look at. So when you're looking at the interest rates right now for a bank, you're at about 5.5%. I can tell you that's not the rate that I got. And if you go and try and do a deal with a bank and you buy a home and you sell it in 5 months, they're not going to want to continue to do business with you and they're not going to want to continue to do deals because in 5 months they're not making any profit on that mortgage. So there's different options you can do with Calvert and there's different levels of financing that you can get as well. They'll finance some of the rentals sometimes, depending on the deal and the spread, but they have something called a 10,000 down mortgage. So with $10,000 down, you're paying 16.49% interest yearly. So that does scare a lot of people, and it is a high amount. We ended up putting 20% down, so we got that down to 9.49%.
Nice. Nice. Yeah. My follow up was going to be how much did you end up putting down in on this? And yeah. Okay, that's good to know. Yeah, I know most people would find it very daunting though, but yeah, you're absolutely right. If you go and get a mortgage on this, not only are the banks not going to be happy with you, there's also possible fees that you have to end up paying at the end of the day, that sort of thing. So going forward, do you plan on using them again for your flips? And and then if so, like once you've built up enough capital, would you prefer to still split that capital up over multiple deals and still pay that high interest rate as opposed to just using your capital, having it tied up in a deal until you eventually get it out kind of thing?
Well, I'd say I'd have to run the numbers to do whatever had the most profit. But in my mind, I would say yes, do multiple deals and still keep that higher interest rates. Now, there is other ways to get financing. I did have a private financer on this deal when I started looking at it, and the same challenge I ran into with the person that wanted to finance it was not in the industry and didn't understand the ARVs or the comps, and they decided that it wasn't a deal they wanted to invest in. I also there is a company that does RRSP mortgages. So if people have RRSPs just sitting there, they can actually lend those RRSPs out in the form of a mortgage. 3 days after I signed the deal with Calvert, I got a text message from somebody saying, "Hey, I got RSPs I want to lend out. Are you still in need of a mortgage?"
Oh
And
man.
yeah, no, I said a little too late, but I'll definitely keep you in mind. So one thing I did is I had some other real estate investors kind of looking for some financing for me as well, and that's where that RSP mortgage came from.
Well, at least you know you have financing locked in for the next deal that comes your way, though.
Exactly.
But that being said, though, the 20 grand that you guys are in with regards to securing the financing, was any of that out of your own pocket, or was that from your partner side?
So the down payment, the 20% was from the partner side.
And then repairs going forward.
Yeah, I do have some money in this deal. As you know, he wanted to see some money in the deal from our side as well. So I definitely have some in there as well.
Okay, good to know. Good to know. Yeah, I think people just feel a little more comfortable when you have some skin in the game there. Um, what was the whole process like so far, though? Were there any challenges? And if so, how were you able to overcome them? I guess the one challenge was, getting financing. You went to Galbert, you got financing. Well, you got that locked up before the deal, so can't even say that was a challenge. I think you sort of preemptively ticked all the boxes required prior to getting the deal. You got the joint venture partner, you got the financing sorted out. And you were confident on your repairs because you got all those estimates beforehand. Um, were there any challenges that you've encountered so far?
Yeah, the financing still was a challenge to me, I'd say it was a challenge just going through the process, and that part does kind of stress me out still, which usually I handle stress very well, but I was leaving the country to go on vacation and trying to get this all sorted out literally up until the day I left to go. So it was that was a little stressful for me trying to get that all sorted out, but we ended up making it happen. So
Okay, that's great. That's
yeah.
great. And I mean, another plus side is, Calvert just putting their stamp of approval on it. If they're willing to give you financing, then they also confident in at least you being able to get their predicted ARV.
Yes.
So I guess the only sort of possible unknown that you have is making sure that you stay within budget, that you get the rehab done in time so that the holding cost doesn't eat away into your profits.
Yeah.
So as long as you're conservative on that, you can feel fairly comfortable knowing that your numbers are good enough for you on this.
Yeah.
So what are you expecting your net profit to be on this?
Worst case scenario, the numbers I ran show it at about 30K, and best case scenario, we're hoping for 74K. So we'll see how that goes.
Great, great. And are you guys just splitting it down the middle, 50-50?
Yes, it is. Yes.
So yeah, looking back on the deal, it doesn't seem like there's anything that you would have done differently because the only challenge you had was really just getting that done within that short period of time before going on vacation. Other than that, there wasn't anything that you would have done differently, right?
No. I can tell you one thing that we are looking into though, as the way taxes work for flips is it is active income. So it's not 50% capital gains like a long-term buy and hold. You're paying tax on the full amount. And a way around that or a way to pay less tax is you can start a corporation. So we are in talks with an accountant to look into doing that. And it is also a lot more money to do your taxes when you have a corporation. So you need to run the numbers for yourself and see if the amount you're coming in is going to offset the amount you're going to save on taxes. But the way that works is you can actually leave the money in the corporation and not pull it out. So you're not taking a salary. And then you can use that money to reinvest and grow your business.
Exactly, exactly. And then all the expenses that you have just outside of renovating the deal, but even just with regards to the running of your business, you can pay for that essentially before paying tax on that money, kind of thing. Whether that's for finding new deals, marketing new deals. Now, I know you go through a realtor, but I guess I'm not an accountant, but there's a lot of other perks on,
Mm,
like with regards to, you know, setting it up in a corporation. And I think, like yourself, if you're planning on scaling it, then it eventually makes sense where the money you have coming in far outweighs the expenses um, that's required to keep a corporation going and have it set up. I think that's
yeah,
a
for
smart
sure.
move is contacting an accountant and setting up something that works best for for your current situation and your goals going forward. Um, Tell me, what are some things that have prevented you from taking action? And this doesn't have to be specific to this deal. This is just in general when it comes to real estate. And how were you able to get over it?
So, a lot of things, like the first thing we talked about was money, obviously, trying to find that joint ventures. And one thing that I did is I ended up signing up for a mentorship program. So Wayne Hillier has the REI Masters Mentorship Program, and I'm part of that. And with that is a great community of people that will help you handle any answer you need. And even for how to find joint venture partners, I set up a Zoom call on a Sunday morning, and I asked people to come and give me some advice. And from that, I got all the advice I needed to be able to go and lock down some partners.
Yeah, I think that those are the two biggest things that you can do to sort of speed up your momentum so that you can get started a whole lot quicker, so that you can get over hurdles a whole lot quicker, is finding a mentor and then finding a supportive community. Um, because yeah, a lot of the time it's in your head, or it's just a small little tweak, or just that boost of confidence, and you can just keep the action going. So absolutely, that is, I think the way you went about everything is really really smart. And I think that will allow you to grow a lot quicker. Some people may think, hey, instead of taking that money and giving it to someone else, why not use that money on a deal? But the education you're gonna get from that deal is gonna be hard lessons learned, and it's probably gonna cost you a whole lot more than what it would have costed you had you gone to someone who's doing what you're looking to do and just learn from them and prevent yourself from making all those mistakes. Because from the looks of it, it doesn't seem like you have any regrets so far. So seems like it's working out well.
No, you know what? And I'm gonna try not to have any regrets because as we move forward, even as I talk to my business partner, about losing money, and when we continue to grow this, I guarantee you we're gonna lose money. There's gonna be a deal that we make a mistake and we do something and we're gonna lose some money. The goal is to, number one, have all the other deals that we're making profitable to offset that. And number two, to keep that as minimal as possible. So I'm trying to do everything I can to minimize the risk on all the different deals that we're doing and kind of looking for worst case scenario and understanding, okay, what's it going to take to ride out that, like the interest rates that we're seeing right now for long-term buy and holds. We're seeing lots of people where their mortgages are going up, maybe to negative cash flow, and they're going to have to put money in every month. So this is unforeseen, but yet are you able to, like, did you see this coming, or are you able to be prepared to handle it is the big thing. Did you have a reserve in place? And then when it does happen, with our property as well, I thought, okay, well, what's other options to make cash flow? Another option might be rent to own with the tenant that we already have. So, being able to understand the different strategies and have multiple exit strategies as well for all the deals that you're doing to make sure that you're prepared.
Absolutely. I think you threw a lot in there actually, and
Yeah.
all great advice. Yeah. Firstly, like if you someone who's planning on doing this as a business like you do, then it becomes more of a transactional thing, right? You are going to lose money, but you need to keep it going. You need to get those deals in. You're looking to scale, and it's okay if one or two deals don't work out as expected, because all your other deals will offset any losses there. I mean, if you're someone who's looking to do this like on a really um, small scale, and then it's a different story. Then maybe you want to be a little more cautious, a little more picky. You sort of have a different scope or different lens to the way you view in the properties across your plate. But with regards to the rental properties, yeah, I know that's a tough one, and I think a lot of people are probably feeling it now with the rise in interest rates. And there's a few things that you can do. I know some people are switching to short term, rent to own. Um, Tell me, with regards to your rental property, is it just a single family detached bungalow?
No, it's an apartment style condo.
Okay.
And I can tell you that apartment style condos are not great cash flow to begin with. So if it was something that I would do again, I probably wouldn't go for that type of property. But we have a stellar tenant in there right now. We just did our quarterly inspection here on the weekend and went in there. The place is spotless.
Oh, that's
You know,
great.
he has a cat. There's no smell or anything. Like he keeps it immaculate. So we're lucky to have a really good tenant in there. And also I have a variable mortgage with a fixed rate. So that is something that a lot of people don't know about. When they see variable, they think their payment's going to change every month, and that's not the case. So this payment actually stays the same, so I'm still making the cash flow, but yet less of my payment is going towards is going towards the principal. It's more of it's going towards interest.
Yeah, yeah. And how long do you have left on your locked in rate there?
3 years.
Okay. Okay. So at least you don't have to think about this for the next 3 years. It's still cash flowing, because that was going to be my next question. Have you felt it at all with regards to the rate increases? So at least that one can be out of mind for a little while. You have a good tenant in place. It's locked in there. It's cash flowing. You could focus on the fix and flips. Are you actively looking for other rental properties to add into your portfolio, or are you exclusively looking for fix and flips now? And then planning on doing that a little later. What's your strategy there?
I am looking for joint venture partners. If I can find a joint venture partner that is ready for a long-term buy and hold, then for sure we'll go and lock down some properties. I am trying to investigate what are the best turnkey options right now. Because I'm doing the fix and flips, you know, burrs are an option where you can put your money in, renovate, and possibly get all your money out. But because I'm focusing on the fix and flips, I don't want to focus on another renovation at the moment. So turnkey properties are very easy. It's something that I can do alongside this renovation, no problem.
Yeah. Yeah, definitely. And another thing is, with your experience that you going to gain now with all the flips that you do, when you do eventually want to explore, using the bar method, it's a lot. You'll be a lot more confident. You'll have the crew put together. You'll have confidence in all of your numbers, knowing that they pretty much spot on. Um, Given there is a slight difference to how you would rehab and renovate a bar property as opposed to a flip property, but you could feel pretty confident estimating your timeline, estimating your costs, that sort of thing. And yeah, I mean, if you have space within what you handling on your flip end, you could maybe throw that in later on if you have the space, the capital, the team. Yeah, I think it will just serve you
Yeah.
overall though. So I'm really interested in following your journey though. But with regards to building your, because this is a business, right? You intend on doing this as a business, and one of the important parts of building a business is branding. And I know you work on this. So do you have any any tips, any things that you've learned that you can share with the audience out there when it comes to building your brand?
Yes, for sure. Start posting every day. Start posting on Facebook, on Instagram, on any of the platforms. And an easy way to do that is just start posting your journey as you're going through properties, as you're looking for properties. Start posting videos, start posting images. Just share your story, and that is the biggest thing that's going to get your name out there. I do have a full-time job as well that I do currently, and one of our other managers here was talking to a past employee and talking about employees that still work here, and he says, "Oh yeah, Cody's here," and the guy goes, "Cody, I thought he's doing real estate now." So obviously the branding's working. They're seeing they're seeing exactly what I want them to see, and as they see the success, then you're gonna have more and more joint ventures come to you and want to invest their money. We want to make it so simple that people can make return on their money and not have to be involved, not have to worry about it, and just get updated statements and see the progress.
That's the thing, though, and I was just about to touch on that. Is with regards to branding, is you might not see the short term benefits of it. Posting posting after a week, maybe even after a month, but eventually, you really reap the rewards on that, because that's what people know you for, and that's what you want people to associate you for, right? Is being a real estate investor. So it builds their trust, their confidence within you, and then it gets people approaching you for deals, or at the very least, when you approach possible joint venture partners, they have confidence in the fact that you know what you're speaking about, so people may feel like they don't have to put effort into branding, but I think it's definitely something you need to keep in your tool belt, because it'll just help everything else. Finding joint venture partners, finding different tradespeople or contractors, finding your power team, finding a community, all of that makes it a whole lot easier. So yeah, great advice there. Post on your journey, post every day.
100%, and I'd like to thank you as well. You were a big help in that, understanding what tools that are out there and what I can use to do that as well. So,
Oh yes, yeah, yeah, exactly. More than happy to help where I can, and I think that's just how it is with most people in this community. I think everyone's just more than willing to help. So yeah, if anyone's interested in getting into investing, just reach out to anyone that you know that's in investing, and guaranteed they'd be more than happy to help you with this. But tell me, when you got started on this, up until this point, were there any? And I'm sure there were, because if you aspire to do anything with substance, anything that's great, there are sacrifices, there are hard choices that you have to make, whether it's just making sure that you post every single day, as opposed to saying, hey, I'm just going to watch some Netflix now and it's okay, I don't have to post today. What were some of the hard choices that you had to make to get into this game?
yeah, you know what? It's definitely not for everybody. And there's a couple of things that you need to realize, especially when you're starting out. And if you're doing this on the side, on top of your employment that you already have, there's going to be some time constraints. So I went with my wife and our two dogs for a family vacation there, and on the Saturday we're heading back, and I had already a brunch booked the next day, a call booked in the afternoon, and also a meetup at a house there. And I'm rolling through this with her, and she says, "Well, girls, we had them for a week, so now back." So there's definitely some challenges and some time constraints, and especially when you're starting out, it might be tough on some relationships that you have. So you got to make sure that you try and bring your wife in. Like it's a great family community. If you have kids, there's lots of these events. You'll come to the meetups. You'll see there's kids there. There was a bouncy castle at one of them. Lots of things to make sure that bring the family in and get everybody involved and try to join the community. So yeah, there is that challenge. I'd say the other big thing is, you need to really have confidence, because there are a lot of people that will tell you that this isn't going to work. There's a lot of people that will tell you that, why are you spending your time on this? Um, and you need to be able to overcome that. You need to be able to see the future and see the outcome and know that you're going to do what it takes to get there. And that's the challenge that some entrepreneurs don't have. There is actually a really good book. It's called The E Myth Revisited. And I listened to the audiobook, and it talks all about three different peoples. There's the manager, there's the entrepreneur, and there's the person that actually does the job.
Yeah, the
So
technician. Yeah.
the technician, yes. So you need to make sure that if you want to be the entrepreneur, you're going to need managers and technicians to work for you. If you try and do it all, you're not going to succeed. And it goes through a bunch of why small businesses fail. So it's a great listen or a great read to, before you start your journey and understand exactly where you are and where you need to be if you want to succeed.
100%. I don't know how many times I've gone through that book, and I think there's an entrepreneur and manager and technician inside all of us, but it's where the bulk of you sort of gravitates towards, and where your strengths are. And I think if you actually go through that book, you can sort of catch yourself on your journey, when there's moments where you want to slip into being the technician, where you want to do this yourself versus knowing your role as the entrepreneur and what you should be doing, or knowing if you just aren't the entrepreneur, then I am a great manager. So I will team up with an entrepreneur and we will get technicians in and we can have the whole picture to make the business work. It's a great book. It teaches you about working on your business and working in your business and the differences and how to set your businesses up from, or how to set your business up from the start to have the best chance of succeeding, and how that's what separates these big businesses from businesses that fail. It's how they start out. not where they end up. It's because of how they start out that they get to where they end up, kind of thing. It's a great book, honestly. One of my favorite books.
Yeah, and it's as we start, as I'm 35 now, and if I would have known what I know now 15 years ago, I would have been a lot further ahead. But as you realize this, you look at the successful people and you'll realize that they've all had some sacrifice along the way that they've had to do to become successful. So, you can't just expect that you want to do this and, your life's not going to change. You're still going to turn off at 4 o'clock and go play hockey or something like that. That might not happen. There's going to be some sacrifices along the way.
Absolutely, absolutely. And I think it again always comes down to how strong your why is and what your reasons are for doing this, so that you can take the uncomfortable action and not be the person that you currently are, the person that you were, getting the results that you weren't happy with, and actually start becoming the person that you need to be to get the results that you're looking for. Um, I honestly think that's great advice, and that book is a great recommendation for anybody looking to start a business. And if you're looking to get into real estate investing, at least not passively, like just owning a few properties over time, then I think it's a great book to go through. Tell me, when you're not investing, how else are you spending your time? I know you have a wife, you have two dogs.
Yeah, two dogs, and they're show dogs, so I have them. Well, they're both have their championships, and they also do obedience, and I do rally and barn hunt and all different types of activities, agility with them. So that takes a bunch of my time as well to train them and work through that with them. I also love to golf. I'm golfing 1 to 2 times a week. That's probably going to change, but that's what was
Yeah,
happening, for the last while. But yeah, I really like to golf, and the goal obviously would be to not have to work at my current work anymore eventually, and being able to get up in the morning and go to the golf course before I start my day. My mother retired at 55, and I'm saying I'm shooting for freedom 45. So I got 10 years to get this up and running and and have some money that I can actually basically retire and have the businesses run for themselves.
there we go. There we go. Just a quick side note. I love golf, but I kind of suck at it. So at least I know who to contact next year when the snow starts to melt and all the courses open up again. I often find that it can be a real struggle trying to segregate each part of your life: the family time, your 9 to 5, the real estate side, and your hobbies. And you can often feel guilty that you're not giving whichever side enough attention, whether that's outside work, outside real estate. You may be spending time with your family, or you're supposed to be on vacation, or in your downtime, and all you're thinking about is real estate, and vice versa, or feeling that you're not putting enough time into spending time with your family. Do you have any thoughts on this? Any advice on that?
Yeah, and it's very difficult.
Yeah,
Um, especially for myself, I need to be doing something all the time.
exactly.
It's just my personality, and so even just being on the phone and having my phone active, researching something, looking at something, the first thing I can say is put your phone away. Put your phone away, turn your phone off even. When you have family time, and try to stop that. So it can be very challenging for a lot of us, but it's something that I'm really trying to focus on. So um, the only other thing I can say is just to try and carve out some time. So if that is Sunday's family time, then Sunday's family time, and that's probably going to be the biggest challenge. As you want to grow the real estate business, that's going to be what you focus on. Your 9 to 5 that you have, okay, well those job duties you need to get done, so you're going to focus on those in that time, right? What's going to fall behind? Obviously, the time that you have with your family. So you got to make sure you carve out time for that.
Absolutely, I couldn't agree more. I think it forces you to be more efficient with your time management. I found I have to take out a little bit of my sleep, a few hours out there, a few hours out of like my leisure time, that sort of thing, and then sort of find time to fit it in. Um,
Hmm.
but it's allowed me to be more efficient with my time. I'm not gonna lie. So that being said, I mean, this has been an awesome episode. It's actually been great getting to know you better, and I'm sure that there's a lot of gold nuggets along the way that people can take from this. But if people want to find out more about you, where can they go about finding out?
So I'm on Facebook, Cody Lee Kelly, or Mighty Irish Home Investors on Instagram.
Okay, I saw your handle, so I didn't know. So you Irish?
I am Irish, yeah.
How many generations within Canada? Because obviously you don't have an Irish accent at all.
I don't know that answer. Sorry. Uh,
Well, that's good to know, though. Yeah, I did
yeah,
not know
yeah.
that until I saw your handle. I'm like, oh, okay, interesting. Yeah, I didn't know that.
Yeah, we're trying
Um,
to think of a name that kind of keeps us unique,
yeah,
and we searched for some other things and found that that might be the one. So,
absolutely. It's sort of positioning yourself for your brand essentially.
yep,
I think that's a great idea. That's a great idea. Well, Cody, I know you have an exciting day ahead of you. So congrats on locking that property up again, and I want to thank you so much for taking your time out to provide everyone with all this value.
no problem. And thanks for the invite. I really appreciate it.
Thank you for tuning in to Building Wealth Through Real Estate. If you're interested in learning how you can completely flip your financial situation around using real estate, then you definitely want to check out this video where I interview Jared Como. This is your host, Alray Noble, signing off.